Good morning. I'm Jen Amos at Weiss Research.
I'm Andy Myers, and this is your morning market alert for Tuesday, November 30th. Stock futures are pointing to a lower open on Wall Street as concerns about Europe's debt problems continue to weigh on sentiment. According to Bloomberg, EU officials are now trying to force Portugal to ask for a bailout similar to the one Ireland is getting. They're worried that if Portugal continues without assistance, Spain's economy may need a rescue. Since Spain accounts for 12% of Eurozone GDP, that would be a much harder pill to swallow for the European Central Bank. Those fears are pushing the sovereign debt spreads on Spanish bonds to their highest level since the launch of the euro, and the shared currency is falling below 130 against the US dollar this morning for the first time in more than 2 months.
U.S. investors will have a load of economic data to digest later this morning. Perhaps the most closely watched report of the day will be the Conference Board's Index of Consumer Confidence. Investors will be curious to see whether the reading reflects the encouraging holiday shopping results we've seen so far. We'll also get a look at the real estate market when S&P and Case-Shiller release their index of home prices in 20 U.S. cities. And at 9:45 a.m., the Institute for Supply Management releases its Chicago Purchasing Managers Index of Manufacturing Activity. Today's data kick off a busy week on the economic calendar. Tomorrow we'll get a reading of manufacturing activity across the country, along with domestic auto sales, followed by a look at jobless claims and pending home sales on Thursday. And the week concludes with the all-important November employment report.
Economic news is also moving the markets in Asia. Chinese investors are expecting big jumps in manufacturing activity and inflation figures, and that's adding to fears of more monetary tightening to slow the economy and clamp down on prices. China surprised the markets last month by raising interest rates, and a prominent Chinese economist said last night that the government needs to increase borrowing costs by another 2%. In response, the Shanghai Composite dropped 1.6% to its lowest level in 7 weeks, and other markets across the region finished broadly lower.
In corporate news, Lowe's may get a boost at the open after the home improvement retailer affirmed its earnings and sales forecast for this year. And some more M&A action is also grabbing investors' attention. The Swiss electrical equipment maker ABB is buying Baldor Electric for $4.2 billion. Shares of Baldor are surging 40% on the news. But Google is losing ground in pre-market trading. The New York Times reported that it's closing in on a deal to buy the online discounter Groupon. The price tag reportedly could reach $6 billion, which would make it Google's biggest acquisition ever. Separately, the European Union is investigating Google for antitrust violations after complaints by rivals.
Shares of Merck may fall when the market opens. The pharmaceutical giant named Kenneth Frazier its new CEO, succeeding Richard Clark. Credit Agricole placed a new buy rating on Merck, along with rival Pfizer, and Janney Montgomery rated Kimberly-Clark a new buy as well. UBS is also weighing in on global healthcare companies, including Merck, Pfizer, and GlaxoSmithKline. It boosted its rating on the entire sector to overweight. Meanwhile, Benning & Scattergood put a new neutral rating on AGCO, and eBay is losing 1% in the pre-market after Piper Jaffray cut the online auction site to neutral from overweight.
The semiconductor industry is getting some attention from Citigroup. It recommends buying chip makers, including Texas Instruments, Broadcom, and Altera, on any pullback in those stocks. And Morgan Stanley still has a positive outlook on global equities, despite Europe's continued debt problems. It says the bull market is not over. Morgan Stanley also assumed an overweight rating on Tiffany. That's the latest from Weiss Research. Have a great trading day.